Happy Monday, everyone. This is The Street Live. I'm Jeff Mark, Senior Portfolio Analyst at Action Alerts Plus, standing on the floor of the New York Stock Exchange with Jim Cramer. Jim, we got a nasty day in the markets today. It's a sea of red. We are seeing maybe some slowdown stocks showing some relative strength. What do you think is going on today?
I think that with the Dow down 700, and you're on the verge of closing, I think you get a little bit of bounce. But I do believe that the key to the rollover here will be do they finally get to FANG? FANG has held up very well. I think that today may be the day that they hit that. The stocks that are finally seeing a bottom are the ones that are finally getting downgraded. I mean, it's been a long time. I saw a downgrade today of Cleveland Cliffs. I mean, there's a stock that now sells at 3 times earnings. Obviously, people feel that the earnings aren't going to be there. Goldman at 8 times earnings. People feel the earnings aren't going to be there next year. I can't say that I love the market. But I can say that if you don't nibble on something like we've done, we talked about that on our Action Alerts video, I think you're foolish. When you have a decline like this, where you have amazing amount of decline versus advance, you got to find something. You have to find something you like.
Yeah, and you say FANG it could be like sort of the last one to go here, and they make up such a large part of the S&P 500. That's why the index has been so resilient. But if you look outside the S&P 500, there's been a lot of carnage.
Yeah, my belief is if you take a stock like Nucor that we own, okay, did we buy it too early? Obviously, I'll do a mea culpa when we do our conference call on Wednesday. But here's a stock that has just rolled over and rolled over and rolled over, and finally it's being noticed, and by tomorrow it could be downgraded. What you'll tend to see, the reason why you can't be too aggressive, but you should be buying, is that tomorrow people will say, you know what, I've been recommending Wells Fargo the whole way, and it's down $2. So therefore, I'm going to declare victory Wells before it rolls over more. In the meantime, you should be buying Wells because it had such a good quarter. So I find you take a Walmart. Now people are saying, listen, maybe Walmart's in trouble. I look at Flipkart and I think, well, that's kind of Amazon in a country that's ravaged by COVID. So I'm looking the opposite of the way the market's going right now. I want to go the opposite way.
What about oil, Jim? So over the weekend, OPEC Plus did agree on production cuts that they'll put in place by September 2022. So oil's falling. A lot of the oil stocks getting hammered. Do you think it's as much as supply as also demand fears with
yes,
COVID?
Now you're seeing that, but I think that the oil's more in equilibrium. They're only adding 400,000 barrels a day. The Permian public companies are not producing a lot. They're still cutting back. The Permian private companies are still pumping a great deal. I think that we make a lot to deal with Delta because no one wants Delta. I don't think you go to the movie theaters during Delta. I think that Disney's going down because of Delta. But, not every stock is going down because of Delta. And I like, when I look at what I see overall, God, I see something, at American Eagle Outfitters, that's going to be good. Might get stuck. Maybe you have to buy some more at 31, but that's okay.
Yeah, and we'll talk more about that stock on our Action Alerts Plus video right after this. But I do want to get your
things like GM. Okay, GM is selling at a ridiculously low multiple. All right, with a whole big EV lineup. Now I'm not recommending GM, but GM at 52 is compelling to me. But here's the problem: tomorrow, someone is recommending GM will downgrade it because they want to preserve their game. They've been recommending it since 40. It moved to 60. They didn't take it off. At 50, they take it off. That is what you're betting against today if you start buying here. But I think you have to start buying here simply because you don't know when the bottom's going to be. But we're going to be oversold. It's a huge sell-off based on really based on the idea that a bunch of athletes got it. The breakthrough is what people are worried about. The Johnson & Johnson, people are worried about. And the Olympics. These are all signs, you know what? We have to be careful. But Europe is leading us down. You have to be buying something here, which brings me circle all the way back to oil. If oil's at equilibrium and Pioneer is at 130, you might have to buy it. Chevron with more than 5% yield. I think that's a buy. These are positions I've been saying if they come in, you got to buy them. I think Chevron, more than 5% yield is good.
So if you're owning some of these high-quality energy names, too late to sell, but maybe you could look to add your position, average down?
Too late to sell. If you own Chevron, you can get it at 6% yield with the 10-year at 1.22. That's a very good opportunity. I think Chevron's terrific.
Now, I do want to touch back on GM because I think you brought up a great point. Now, if people are concerned about COVID cases again, they'll probably be less likely to take public transportation. And that was that huge boom that we did see with the auto stocks last year when they saw demand come back.
Yeah, I mean, look, which leads us, I'll talk about another automaker on our conference call, but also on our Action Alerts video, which we haven't done yet. But when I see the VIX up 5, when I see Europe falling apart, and the mixed signals in UK, Boris Johnson, obviously, he contact trace, so he's staying at home, even though they're saying everybody can go out. People don't know what to do. And the confusion, whether it be the president saying that the Facebook ads are killing people, or whether it be Gottlieb, who's basically saying, look, you don't really need to worry, but you have to worry to some degree, which is fine. I mean, I think that's actually a correct view, but that does not make you want to buy stocks. You want to buy stocks because they're down so much, in some cases other than FANG, that it just makes too much sense. Do you want to buy the Nvidia that you sold at 820 with the stock at 726? Of course you want to. But if you've never downgraded Nvidia and you feel like it's slipping away from you, then you downgrade it. So that means you buy some today and you buy some tomorrow.
What about the notion of peaking? So on Real Money, in your Real Money column this morning, you talked about we could see a peaking in China stocks, peaking in the semiconductors, travel, leisure, and entertainment. Now, specifically on the semis, though, you called out how perhaps Wall Street maybe got a little bit too bullish on the growth prospects. Yes. Meanwhile, Taiwan semi, they may be a little bit too, they may be getting it wrong when it comes to some of the demand that we are seeing in these chips. Could you just explain on the semi complex?
Sure. Okay, so the semis go up as long as there's tightness, and then the semis start going down when there's equilibrium, not when prices fall. Equilibrium is a predictor of prices. So a lot of people feel that things could get to equilibrium according to Taiwan Semi. So they're selling AMD and they're selling Micron, whatever. They're not even thinking about the idea that maybe these stocks are not as cyclical as we think, and that there's tremendous demand for them out of sync with the economy. And therefore, I think, while I'm not recommending Micron, I do think that AMD and NVIDIA have very little to do with the economy and much more to do with high-performance computing, which is in evidence as obviously with social media, you have to have high-performance computing. So I look at AMD, which is down a great deal from its high. And I look at NVIDIA, which is down a great deal, and I say, getting interesting. Maybe we're down 1,000 points today in the Dow, but I do feel that you have to take a hard look at some of the stocks that are down. You know, I'm not saying you have to buy Cisco. Cisco's not down a lot. Salesforce just had a big run. I don't necessarily want to do that. You want to look to see if the stock's been straight down, and then you do some buying.
Let's talk about M&A. So news broke late last night that Zoom has plans to acquire Five9 in an all-stock transaction. Now, you've been pretty, you've wanted Zoom to break out away from their pure video communication standpoint, and they can do that with this call center business that Five9 has. So what do you think about Zoom after this deal?
My worry with this deal is they had a loose partnership with Five9. So why did they need more? Why did they have to own them? And do they therefore think that their stock price is high, even though it's down, almost down 300 points? Why would they do it here? They have so much cash. Their stock is down big. Are they signaling that our stock's still too expensive? So I don't like that. And I also think that you didn't need to buy Five9. Now, I will say this. They've been on, Ryan Trollope has been on Mad Money probably a half dozen times.
The CEO of Five9.
Yeah, he's a very smart guy. If you get him with you, I think you got something that's good. But I do caution that Zoom, I feel, did not need to do this deal, and I want them to do a deal.
So your question is that Zoom used their stock as a way of currency in this transaction, exactly, and it might be a hint that it is a little bit overpriced.
Exactly right, and that is worrisome given the fact that the stock's come down so much.
Yeah, and just on the topic of M&A, now we did see this morning that the DOJ did confirm that they will approve the Slack transaction, the acquisition by Salesforce. That deal is expected to complete, I think, Wednesday, on or about Wednesday. What do you think about Salesforce?
Well, people said, where's Benioff? And obviously he does have this number 2 that he likes. Benioff's actively engaged. I want to make clear people know that. I think Benioff's been waiting for this deal to close. This is going to let him attack Microsoft. There are many people, myself included, who hate Outlook. The collaborative software approach of Slack is exactly what's needed in a hybrid environment. So I think it's genius of Salesforce, but I also agree that MuleSoft was a great deal. I thought Tableau was an incredible deal, and I also thought ExactTarget was great. And I used ExactTarget, and I had been using Tableau, and I think that those were smart acquisitions that were panned. I think Slack's going to turn out to be a great acquisition.
Right, and those were the 2 points that you've been telling subscribers at Action Alerts Plus. 1, don't bet against Benioff when it comes to M&A. 2, Slack is just perfect for the hybrid work world.
And again, remember, here's what I'm saying. When the VIX is this high, when the market falls like this, certainly in reaction to Europe, when you get to down 3, which is what I said will happen, down 3 to 5, and we're very oversold, you're going to regret that you didn't pick at the stocks that you like. I'm going to pick one that that's neutral for us, GE. So people between 12 and 13 said, I miss GE, I miss GE, I miss GE. Now it's at 11, and no one's saying I miss GE. They're saying, God, I got to sell GE. And that's what's wrong with this market. I want people to recognize that if they own stocks they like, you're getting a chance to buy more. Don't hit those bids. Don't sell right now, because what you might be selling is something that's already down a lot. Don't be intimidated when you see the S&P down, because a lot of that is FANG. And watch FANG roll over, because FANG has been incredibly strong. Alphabet's been really strong. Apple's been really strong. Amazon's been really strong. Let those come down. Facebook, even under attack by the president, has been very strong. Let those come down if you want to see where the market's going to bottom.
So is that saying look at the stocks that have already corrected, say 10, 15, 20%?
Look, I like Win and I like Nucor. Again, did we start too early? Yes. Are they the right prices? I got to tell you, if I had seen these prices before and I had not bought them, I would have said, oh my God, we got to buy those two. They're down so much. Now, Win could be down. All the travel and leisure's down because of what you said about the variant. I think the variant's got people very concerned putting masks on in California, but the variant itself, which everyone is going to get who's not vaccinated, may be bad if you're, let's put it this way, the variant's not killing a lot of people. And there are a lot of people who feel like that they're asymptomatic, so what's the deal?
All right, let's move quickly to SPAC. So the big one, Pershing Square Tontine Holdings, it actually it's backing away from its agreement to acquire 10% of Universal Media Group, Music Group. Now, I mean, this has been one of the biggest SPACs out there. Now,
right.
What do you think this walking back from their transaction after discussions with the SEC? What do you think is that any commentary to the SPAC market?
I think that the SEC is tired of SPACs. Wants to take a highly visible SPAC and spank it. Now, SPACs are part of our problem. What's really causing the sell-off? Too much supply. People have to remember that the market is, in the end, an actual market of supply and demand. And there's been so much stock that has been bought, that we frankly don't have the money to be able to keep buying things. And the SEC doesn't want more SPACs because SPACs are allowed to give you any projection they want. The SPAC that he wanted to do is so complicated that the SEC basically said, you know what, we're not going to let this happen. But that's good because then a lot of people are going to get trapped. A lot of people are going to get trapped in SPACs. And it's a shame. The only one I really liked is, I like STEM. I like Beauty. I like Skin, SKIM, which is run, well, the executive chairman is Brent Saunders. But as the market comes down, people have to be looking for what they want to own, not that they want to flee, because I think there's so many good opportunities out there.
All right, real quick, Jim, just on a different note, last Friday you tweeted out a picture of an old notebook that you had from 5th grade of the New York Stock Exchange, and it featured so many tickers from then. So, look, you were obviously avid about the stock market at a very young age. What advice would you give the younger generation who wants to get involved in the stock market?
You know, find your Merck, find your Lilly, find something that is, and don't worry about the dollar price because you can use pieces. Find something that is that you like so much that when it goes down you say, wow, I can buy more. That is the trick, because you can't buy something that when it goes down, like Snowflake, and you don't know what it does, you say, oh, I got to sell. You have to own things that are tangible to you. And if you do that, then you won't get blown out.
All right, lastly, Jim, we do have our Action Alerts Plus members-only conference call this Wednesday at 11:30. We are asking for questions, so if you are a club member, please submit your questions in both email and video form. We'll try and do a couple video questions this time. Any thoughts before the call?
Answer more questions. Cut back a little bit on our worldview and what we have to say. You know, I try to mention every stock. We may not be able to do that. But I would say that it's going to be coming on a day, finally, where we've already had the big decline.
So that's an issue of saying, look, we've been doing these calls month after month for year after year, and typically we have seen some pullbacks on the days we have the calls.
We got a real pullback. I think that if the Dow goes down 1,000, you're going to see a lot of people really panic. They shouldn't, because the Dow is at, it's at 33. I mean, it's ridiculous.
Do you think margin calls get into some type of
yes, because look, Robinhood, they're going to discover they're going to be able to get between 20 and 35% of the Robinhood deal. Well, they need to sell in order to get that. Now, that means they have to sell AMC. It means they have to sell GameStop. They need that money in order to be able to get shares in Robinhood. So, believe it or not, the Robinhood deal is going to pressure the Reddit stocks.
Let's hit on that Robinhood deal. So they're saying that, according to an amended SEC filing, they're looking to become public at a valuation around $35 billion. Right. Do you think Robinhood has the potential to be a cult stock like we've seen with Tesla, PennNat in the past?
Yes, but it's funny because you see how well E-Trade's doing under Morgan Stanley, and you know that Robinhood is just an algorithm. It's a great site, but it doesn't. If you go up the food chain at Morgan Stanley, you do well at E-Trade, then you can go and work with a broker at Morgan Stanley and really get a lot of help. Robinhood, no. I mean, Robinhood people are on their own. They're going to be buying a lot of stock on this deal. Robinhood's losing a fortune. They're going to have to sell with the Dow down 800. They're going to have to sell their AMC and sell their GameStop. They don't want to. They want to hold those. But they have no choice if they're going to buy stock in the Robinhood IPO, which they're going to, because that's going to be a cult stock.
All right, that's all the time we have for today. I'm Jeff Marks. We're going to go to the daily rundown at Action Alerts Plus right after this, and we'll see you tomorrow.